Welcome. Thank you for being here for this webinar on payments industry practices for combating elder financial exploit. Recording today's session, and we will share with all registrants the recording as well as the slides and other materials after the training. So you will receive that. A few notes about our layout here in Adobe Connect. Of course, you see the slides in the center of the screen. To the right, many of you have already discovered the chat column. And this is a place throughout the webinar where people can share thoughts. And many of you have already begun introducing yourselves there in the chat. Moving clockwise around the set of pods here in Adobe Connect, you'll also see that there's a downloads area. And there are two important resources there for you to check out. One is the slides from today, and you can download those at your convenience. And also there's a set of elder financial exploitation resources compiled by Niche that we'll be talking about today, and you can download that list and explore those resources after the webinar. Next is the FAQs and links box, and this has important information about getting the slides and making sure your audio is working. And in addition, below those facts are resource links to some important resources that are part of the presentation today. And then last but not least, there's a Q&A box, and this is a space where you can ask questions of us, including questions that you'd like for us to put in the queue for our Q&A portion of today's webinar toward the end. With that, we're ready to start our webinar for today. It's my pleasure to introduce Jennifer Duane, Senior Program Analyst for the Office for Older Americans at the Consumer Financial Protection Bureau. And Ms. Duane leads that office's Elder Fraud Prevention and Response Networks initiative, and we'll kick off today's webinar. Jennifer.
Thank you so much, Ben. Am I coming in clearly? I thought I might hear an echo there.
You're coming in clearly.
Perfect. I was slightly distracted there for a second, so I just wanted to make sure that we let you know that we are recording this session today, and the recording will be available to you and to others after the webinar, along with slides and other resources that are shared. So welcome is the main reason I'm here today. Welcome and thank you for joining us for this very, very special webinar. I think we can move to payments industry practices for combating elder financial exploitation, an area that we do not generally know a lot about when it comes to elder financial exploitation. So today's topic is obviously EFE, elder financial exploitation, the illegal or improper use of an older adult's funds, property, or assets. And you can read along. And that financial institutions and financial technologies that process electronic payments can play, and I will say they are playing, a very important role in combating elder financial exploitation. For instance, they can identify trends and patterns in transactions. They can take steps to help prevent identity theft, fraud, fraudulent transactions, and other crimes. And I won't say they can, I will say they are doing it to the best of their ability at this point, as this is such an emergent social issue and it is moving very, very quickly, at least particularly in the last few years. And they do assist with early intervention, investigation, and the recovery of stolen funds. Next slide. I didn't go over the disclaimer slide, but I will just paraphrase the disclaimer, is that for myself and Lisa, this is our representative disclaimer slide, that we are making this presentation, Lisa and I, based, being made by ourselves as CFPB representatives on behalf of the Bureau. And it does not constitute legal interpretation, guidance, or advice of the Bureau. And we may express opinions or views that are our own and may not represent the Bureau. Thank you. Okay, back to the stellar lineup of speakers, starting with Gary Stein, an absolute rock star here at CFPB for a long time that we've known each other and has since moved on. And delighted you're here today and more or less emceeing and supporting the program. Thank you, Gary. And Jason Cradaville, the head of public policy and public affairs. You'll get more substantive introductions as we go along. Also, Raylene Perny, I think she might be on the next slide, who is with Nietzsche, Director of Risk and Fraud, and Mary Gilmeister, President of Matcha, a true champion, both Raylene and Mary, true champions of elder justice out there in the ACH field. And then my esteemed colleague, Lisa Schifferly, who is Senior Policy Analyst with the Office for Older Americans, along with me at the Consumer Financial Protection Bureau. And she's also co-lead and a very, very significant influence over our work here in such a great way. So with that, we'll move to we have an introduction to the CFPB. Federal agency, you all probably know. As a matter of fact, I would love to know in the chat if any of you here today have never heard of the CFPB. I imagine if we put it the other way around, the chat would fill up with yes. But if you haven't heard, please say, this is the first time I've heard. And if you did not know that the CFPB has an office for older Americans specifically, it would be great to hear that this is your first time hearing it, just so that we know that you are new to the family. We are dedicated to make sure you are treated fairly by banks. We say financial institutions, lenders, and other financial institutions. And when we say you, we mean consumers, but you all are consumers, so you all count. And we want to be on your side through life's financial moments. And many of those actually happen later in life and are very significant, especially if there's frauds or scams or other detrimental changes to your financial health and well-being or those you love in the future, or what's happening now, which you'll hear a lot about. So in the Office for Older Americans, we work to help older consumers prevent or avoid financial harm. We also work with older consumers in terms of our resources to help make sound decisions at key moments in your financial lives. We have a very robust website, consumerfinance.gov/older Americans. And it's full of all sorts of information. So please have a look if you haven't before and share it around. So first, I'll talk about the key initiative we have that I happen to lead with Lisa, the CFPB Elder Fraud Prevention and Response Networks program, which we call Elder Justice Networks for short. Networks are not a one-size-fits-all type of a initiative or project or program across the country, but there are, as far as we know, they're hard to track because they don't live under one agency roof or under one, sort of name or moniker or any kind of, they can be very variable. They're very ad hoc. But what we consider a network is a sustained and often largely voluntary collaborative effort or a partnership or alliance that works to prevent, detect, and or respond to elder financial exploitation. And I'll give you a couple of examples. Some of you may be aware of elder abuse multidisciplinary teams that are often run by county agencies, sometimes with APS at the helm, or local legal services, or law enforcement, or even some financial institutions have headed these up, which is wonderful to see because we need all hands on deck. They're also sometimes known as FAST teams, financial abuse specialist teams, coalitions, task forces. There's many, many names for them, even forensic center, which actually implies a more clinical type of an approach to elder abuse and often supports other types of networks in helping to get victim services to those who are being targeted. Next slide, please. So let's hear from you now. This poll asks how you would describe your organization. with who's in the room, I like to say. And a certain song comes to mind from the 1970s, but I won't sing it for you. I'll spare you. Who are you? So financial institution, bank or credit union, and payments processing, way up there. Thank you, financial institutions, all of you, and every one of you from every sector for joining us and being so engaged and supportive of our work in this area. And you. And for non-payment professionals, this is you payment professionals, take your fingers off the mouse here. Very interesting. If you are a non-payment professional, what is your level of familiarity with the payments industry and what they do? Okay, it's good to know. It's good to know that there's a somewhat familiarity out there too. That's great. And some varies and not familiar. And then the next one is for payments professionals. Do you or others within your organization work with social services and law enforcement specifically on elder financial exploitation issues? If yes, and you feel comfortable with it, please tell us briefly in the chat how you are engaged. Are you engaged in an elder justice network, or are you engaged in an industry network on frauds and scams? We're particularly interested in what's working specifically on older adults, but if you have an innovation or something you'd like to share in a few words, or if you'd like us to follow up with you, please indicate in the chat. Okay, well, very interesting outcomes. So thank you so much for that. And now I would like to hand off to Gary Stein, partner and chief portfolio officer at 99F FinTech. 99 FinTech. Hey, Gary.
Hey, Jennifer. Thank you. And are you all able to see me?
I don't see you.
Gary, we don't see you quite yet. You'll have to reactivate your video.
Oh, video. Sorry. All right. There we go. Well, thank you for having me, Jennifer and Ben. And I'm really excited to be on this important panel and playing kind of mini role of MC. We've got great speakers. So I'm going to start out by just giving a little background. That poll was really helpful. I think most people here, it appears, are somewhat familiar with payments. But I think it's helpful sometimes to break it down, even for those of us that have been in the financial services industry for a long time. Because when we think about how they work, and especially how emerging types of payments are manifesting, it starts to point to the types of scams and things that we're seeing preying on not just older Americans, but all Americans. So I think a lot of people don't think about this, but when you think about payments, obviously we know it's money moving from one entity to another. But there's generally two flows that happen with payments. One is the actual money movement, the transfer of funds, and the other is the transfer of information. So key pieces of information in a payment are the payer's authorization, and then the payer's direction of who they're paying, often with a time and often with a type of payment, although sometimes the payee can dictate that. If we think about, when we pay our bills online, we just can't Venmo our mortgage company. They dictate, they'll take ACH or check or some other thing. So that's not always in the payer's control, but the payer, when they authorize, they are agreeing to pay somebody, pay a certain amount, pay at a certain time, which could be then or in the future, and pay through a certain channel. And that's key. Now, most legacy payment systems, and again, forgive me if many people realize this, are debit pull. And so what that means is the payer is giving their authorization to the payee to pull money out of their account. So if we think about how, if I go online to pay my electric bill, I go to Dominion Power and I say I want to pay it, and I give them the routing number and the my account number and the amount, and they actually send a debit request to my bank for the amount that I have authorized them to pull out of my account. When you hand your card over to a merchant, it's the same thing. You're giving them the authorization with that access device. They're swiping, and basically that gives them the ability to tell your issuing bank to send money to them. But not all payment systems work that way. There's another form of payment system called credit push. And in a credit push payment, I'm telling my institution to send money to a third party. Okay. This is fundamentally how wires work, but it's also how a lot of emerging payments work. If you think about Zelle, for those of us on this webinar that have used that before, it's the same way. I identify and I tell my bank who the payee is. I enter in their token information, their mobile number or email address, and then my bank sends the money to that entity. And that flow is important, because to redirect or to get money from somebody, then that means that in a credit push world, you have to convince the payer to do something. Now, you'd have to convince them also something if you wanted, in a debit pull world, maybe to give them your debit card number or something else. But there are scams that can be achieved through the stealing of credentials. It's a little, the types of scams that we see in the credit push world are a little different. It's also important to note that the forms of payment that we see in credit push, like wires, things like Zelle, tend to settle very quickly. So whereas in a check, which is also a debit pull, I give my check to Jennifer, she cashes it, and her bank then goes back to my bank to pull money out of my account. That can take some time, we know, decreasing generally as it goes. But in a Zelle or wire payment or any of these other emerging forms of payment, it could be with crypto or anything else like that, I'm sending a payment, and generally it settles right away. And so for a scammer that's able to convince somebody to send them money, that's a good thing. And maybe, Ben, at this point, we could put up the slide that Raylene put together. Let's see, there we go. So one of our esteemed fellow speakers, Raylene Pernay, put this together. And this is kind of a map of different types of scams and frauds that can affect seniors, but really non-seniors as well. And we're going to talk a little bit more about this as we go. But this whole point about credit push and debit pull, I make this because with the emergence of faster moving payments and the fact that many of these are coming in a credit push format, that is dictating, I think, the types of frauds that we see more often, convincing older Americans to do something, to take an action and send money. And what else is important, in this emerging payments world, is that the ability of a financial institution to intervene and do something is changed by the way these payments work. So in the old days, if I wanted to send a wire, I might have to go into my branch, and this is still how many wires are done. And the teller might have an opportunity to ask me about who the recipient is, why I'm sending it, and maybe if they hear about a Nigerian prince or something, intervene. But some institutions now allow for the ordering of a wires via online banking or mobile, or certainly via telephone. And other payment systems, again, I'm not picking on Zelle, I'm just using them because I think as an important emerging channel, I go onto my mobile banking app and I order the payment from my phone. There is a potential for electronic intervention and rules, but not necessarily a human intervention. And the fraudsters realize this, and they shape their scams around these things. So with that, I want to move on to our next speakers, who I think are going to be telling us, really important information about how these frauds really occur, and some of the steps and what we can do to prevent them, as well as what many of you in both financial institutions and law enforcement can do to identify, intervene on, remediate, and resolve. I'm very pleased to introduce the next speaker, Jason Credeville, Head of Public Policy and External Affairs at Centrelink. Centrelink provides fraud and identity solutions to financial institutions in the U.S. Jason also serves on the board of the Identity Theft Resource Center and is chair of the Fairfax County, Virginia Consumer Protection Commission. So he is, I think, a very knowledgeable speaker under a multitude of hats. Jason's going to discuss technologies financial institutions use to stop older Americans from falling victim to identity thieves, as well as some of the key trends and stats behind elder identity theft today. He's also going to walk us through a case study to showcase how data analysis can be used to prevent a fraudulent account opening. Jason?
Well, thanks, Gary. Thrilled to be here with everybody today, and just a preemptive thank you to Jennifer and the CFPB team for the opportunity to present. As many listening will know, identity verification and making air quotes here, knowing your customer, it's a regulatory requirement for financial institutions. Of course, we know there's a lot of you on, and I'm sure there's a lot of heads nodding in the affirmative. But it's also a crucial measure for protecting consumers, and particularly vulnerable groups like older Americans. My company, Centrelink, I'll describe us a little bit more later, but so we provide, as Gary mentioned, identity verification and fraud detection for banks, credit unions, fintechs, to spot problems at the point that a consumer is applying for financial services, which I'll describe a little bit more later on. So as a result of that, we pretty much sit in the front row of criminals attempting to leverage and exploit stolen identities or use synthetic identities to defraud financial institutions. And going even beyond just our efforts to prevent those harms, we're also gathering valuable insights into the tactics and strategies that the fraudsters are actually using. These insights can assist law enforcement, the financial institutions that we work with, and of course, other stakeholders, regulators, policymakers, et cetera, in stopping criminals and aiding in the recovery process. How companies like ours and many others in the identity and fraud space use and analyze data, especially historical data, put a little pin on that one, I'm going to come back to that point later on, is a valuable and increasingly important technique in preventing identity crimes and elder financial exploitation, especially, as Gary described, at the speed at which money's moving these days. So for my portion of the agenda today, I'm going to spend a little bit of time level setting on the state of identity verification in the marketplace, take a dive into some of the data and trends we see in elder identity theft, and finally, as was mentioned, I'm going to walk through an actual case study that our team analyzed to illustrate these challenges and how pulling together all of the identity puzzle pieces can protect a senior citizen from becoming a victim. Okay, one caveat on this slide. Just to be clear, this is a dramatic simplification of what is in reality a wide and diverse marketplace. But for purposes of our discussion and that we don't have all day to talk about this, looking across the digital identity ecosystem, ID verification can generally be distilled down into these three categories or types of technologies. So biometrics, of course, that's involving the use of some unique physiological trait like your fingerprints, facial recognition, iris scans to authenticate a user. If you're a fan of an Apple product, for example, you probably experience this quite often throughout the day. Where the use case makes most sense, like with your phone, biometrics offers, certainly a pretty high level of security due to the uniqueness of these particular traits. Document verification, of course, that usually involves, a process of uploading, scanning in some sort of an authoritative government-issued ID, like your passport or your driver's license, which are then cross-referenced by a service provider against some sort of official database or validated through some analysis of the document's features, like a hologram or a watermark that might be embedded in that document. And the third category, so machine learning and pattern recognition technologies. So think of this as data processing and in a way that supports identity verification by detecting behaviors or anomalies, either say like in the user activity or with the individual attributes of a person's identity, like their phone or their address, for example. So these systems, they come in many, many different flavors, ranging from analyzing user behavior patterns, such as like how quickly you're typing, to analyzing really large data sets very rapidly to determine if, like I said, an identity or even parts of an identity are being used in a way that makes sense for a given person, or for that matter, corresponds even to a real person. Like I mentioned, synthetic identities are a big problem, but I know some of our other panelists are going to speak to that later on. But look, analyzing these historic patterns is a particularly strong technique because fraudsters, no matter how sophisticated, they still haven't figured out how to create new history. But regardless of the method or the type of tool, the goal is the same, right? Which is to detect potential identity fraud, flag suspicious activity, and reduce friction for valid consumers who are trying to get access to the financial products they need. Okay, let me just very briefly explain who we are. We are not quite yet a household name, and just where we fit into the process for protecting seniors from identity crime. So as mentioned, we work with banks, credit unions, fintechs of all sizes. We're validating identities and trying to stop fraud at the point of application. Thinking back to that last slide where I described the 3 categories, we fall into that last category of data analysis. So our systems are using statistical machine learning models to identify fraud. We see, as you can see on this slide, somewhere north of 1 million applications a day. And of those, about 20,000 or more are attempts at identity theft. As you can see on the right, this is applicable across pretty much any type of financial product or service that you or I as consumers might want to apply for. Starting to drill down just a little bit more into that, of those 20,000 ID theft attempts per day, more than 4,700 on average are of people over the age of 60. So nearly a quarter of all the cases of identity theft that we see are older Americans. Okay, from here, I'm going to start to get into some of the trends we see across our network. Okay, what we're looking at here are rates of identity theft victims over the age of 60. Now, again, these are rates, not concentrations of victims, because otherwise this map would just show where all the major metropolitan areas are. So what you're seeing here, the darker colors are showing areas where, since the start of this year, we saw the highest rates of applications from seniors who've had their identities stolen. So what stands out to me are a few areas of concentration. First, if you kind of look at that map, the area in the upper Midwest, starting in Ohio and extending west to Kansas. Next would be the Pacific Northwest. Interestingly, when I did a similar mapping, I don't have it in this slide deck, for Gen Z consumers, the Pacific Northwest was the one area that lit up red for both demographics. So a key takeaway here in my mind is the power of network effects. So tools like this, combined with robust case data, when you've seen, when you're seeing 1 million or more a day cases, that can allow a fraud fighter to get pretty granular in identifying where the hotspots for identity crime are. Okay, so what are the common characteristics of identity theft cases affecting seniors? Okay, so probably given the amount of financial institutions listening in, not too surprising, the most common characteristic of risky ID theft cases among seniors is some discrepancy and anomaly with the provided phone number. Second most common, issues with emails, and third is address. So remember, it didn't always used to be this way. Years ago, address would have been number 1 because in most instances when a consumer applied to open an account, whether that's a credit card or a checking account, they had to wait to receive something physically in the mail at their home address. So that's whether that was a credit or debit card or a checkbook. They couldn't use the account or access the funds until they had that physical thing in the mail. Today, of course, that's different, right? You can apply for an account and gain access to it almost instantly. So in other words, the means of communication has changed over time and has made identity theft both adaptable and arguably easier as financial services has gotten faster and become more digitized. All right, let's double click into each of these just a little bit more. Okay, let me highlight a few of these trends. Let's start with phone. Okay, phone doesn't belong to the applicant. I think that's pretty straightforward. The third bullet point under phone, however, phone number corresponds to a risky carrier. So what that means is think voice over internet protocol. So internet phone services that can be created within moments of wishing to use it for something. Google Voice, for example, is pretty well known as a popular tool amongst fraudsters. Moving on to email, emails created the day or within a week of an application is generally a pretty strong signal that something could be going on. Knowing the age of both an email and, say, a phone, or when it was last ported, say if you moved from Verizon to AT&T 6 years ago, knowing when that was ported helps give our models, for example, a little bit more of an understanding of, hey, does this history make sense? Or is something new happening with a particular identity attribute that could be a sign of fraud? And the third bullet under email tied to other fraud cases is interesting. And what I mean by that, and what our data is showing, is where we have been able to identify, looking across all of our customers and all of the cases that we've seen since we flipped on the light switch, we can see when emails have been tied to other cases of known fraud. So when we see an email or even a phone tied to known historic cases of identity crimes, there's a pretty decent chance that what we're seeing today could also be an identity crime as well. And finally, address, of course, that's third, but it's still, somewhat prevalent and is still a characteristic worth noting. So application history within 100 miles, that makes a ton of sense. And here I've grouped IP address in here as well, because nowadays, your IP address is arguably right up there with your physical address as a key part of your identity. Okay, moving on. I promised you a case study, so let's take a look at our friend Gerald from Illinois. And again, this is an actual case that we reviewed. Obviously, Gerald is not his real name, and I've changed enough of the identity characteristics where I feel confident that Gerald is pretty anonymous here. Age 77, lifelong Illinois resident, never left the state, and an application was received by a subprime credit card issuer. So one of the key questions we ask ourselves when we're looking to determine if Gerald is who he is, or if this could be a case of identity fraud, is, have we seen him in the past across our network? Either Gerald legitimately applying for financial products, or perhaps Gerald having been victimized in the past as well. Unfortunately for Gerald, the answer is yes. And as you can see here, from August 21 to May 24, within our partner network, we've seen his identity used 19 different times. All of them see the y-axis indicates the confidence, the score that we assign that case. The higher it is, the closer to 1,000, the more confident we are that what we're seeing is fraud. So in that period of time, we saw his identity used 19 different times across 15 different financial institutions, 8 different phone numbers associated with Gerald, 7 different emails, all of which contributing, as you can see, to very, very high confidence in our system and our ability to then alert our financial institution partners that this is very, very likely to be a case of identity theft. So now let's really just dig into one of these cases and kind of bring things all together to understand how these signals and where they come from and why they can all point us confidently to say that something is actually fraud. So each of these bubbles represents a fraud signal that our model identified that caused it to flag with very, very high conviction. You can see there, it's 981 out of possible 1,000, that this is the case of identity theft. Now, if we start with the bubble, it's about at 8 o'clock there, it's blue. It reads name, date of birth, and SSN on application consistent with an actual consumer. So that tells us that Gerald is real and that there is a core identity and a person that corresponds to an actual consumer. In our case, Gerald. All of the other bubbles tell the story of how he is a victim of identity theft. I'll highlight just a few. Let's see, at about 8 o'clock, you can see the provided phone is with a high-risk internet phone provider. So thinking back to my last slide, voice over internet protocol phones, disposable phones that can be quickly made and used in a case of fraud, for example. Very, very common characteristic of these cases. You can see the red bubbles. There's 3 of them with our logo in them. They all actually relate to application address and email tied to multiple stolen identities. So again, that power of the network effect and having reviewed just a whole lot of cases to identify patterns that can tell us when phones or some other part of Gerald's identity are being misused over and over with multiple distinct identities, indicating that there is some organized effort to steal identities and then leverage them to obtain credit or some other financial product. Finally, at about 11 o'clock, 2 o'clock, and 5 o'clock or so, you see signals related to the address. All 3 of those are specific to the address. In fact, in this case, the application address was from Massachusetts. And as I mentioned, we know that Gerald has only ever lived in Illinois. So this case sadly checks all of the boxes and fits all of the leading patterns that make it possible for our analysis to conclude that he's been a victim of an identity crime. So just to wrap up, a few concluding points. First, there are many tools and many options for both law enforcement, financial institutions of all sizes to use to protect seniors from identity fraud. And an important point is, like, they might be state of the art, but that doesn't mean they can only be used by huge sophisticated banks. They are readily accessible for many use cases and many applications. Second, for financial institutions, as elder fraud has grown and gotten more sophisticated, it's getting harder to see the basic, customer identification program sort of holy grail of first name, last name, SSN, date of birth, and address as being sufficient for a check the box regulatory exercise. As you saw just from the bit of data that I was able to share, fraudsters are relying on bogus phones and emails to carry out most of their fraud. And if you're not looking at those things from a best practice standpoint, it really is something you should look at more closely. And finally, to protect seniors, history matters. Again, even with that threat of generative AI, like I said, you can't cheat history. Chat GPT, Fraud GPT cannot make up the history of our friend Gerald. Analyzing data, looking at cases through that lens can make a big difference in protecting older Americans. And with that, let me hand it back to you, Gary.
Thanks, Jason. That was great. Just to recap, Jason gave us an overview of how ID verification works, how older American identity theft is occurring, and how Centrelink and the rest of us can help to stop the ID fraud that leads to elder financial exploitation. Next, I'm pleased to introduce Mary Gilmeister. Mary has 40 years of experience in financial services, including the last 30 as president of MACHA. MACHA is a payment association established in 1975 that serves financial institutions, businesses, and municipalities throughout the Mid-Atlantic, Midwest, and Hawaii, very contiguous geography. Mary will discuss ways in which the payments industry works in collaboration with partners to combat elder financial exploitation, highlighting several types of scams. Mary?
All right. Well, thank you, Gary. And I also would like to thank Jennifer and Benjamin and the CFPB for having me speak on this topic, which I'm very passionate about. And I also have a disclaimer, which I won't read to you. So with that, what was the #1 scam reported over the course of last year? You can put it in chat. I'll just give you a few minutes. These are all very popular going forward. And for time, it is actually phishing in emails and text messages. And one of the tools that you can use when you're looking or working with your account holders is to, or your customers, is to really check the address. Go to GoDaddy website or whitepages.com. You can also go to the Better Business Bureau. And we have found some interesting scams that have taken place where somebody's working out of their apartment. So A popular scam is a romance scam. And a romance scam is where you meet someone online or via email and they say all the right things to capture your heart. For example, my mom, she's 88 and she loves to text. She'll type a whole paragraph in a text message. And it's interesting because somebody came back to her and said, "Oh, you write beautiful text messages," and she's like, this has got to be a scam. Another situation is where an elderly woman lost her husband, and all my stories are true. And she fell into a romance scam. She lost over $140,000 before she realized what was happening. And earlier, Jennifer talked about networks. We worked on this case for our member and we were able to recover $40,000 because we knew the two financial institutions that were involved. And we were actually going to, talking to them, and come to find out the other person she was sending to the money to was actually an older gentleman, 87, and he was a money mule, which we'll be talking about that later. Another example, which is not a good situation, was somebody met somebody online. They promised to marry her. They were actually, buying things for the wedding. And he said, well, I need to access your account. So she used a Cash App. She gave him access to her account. He withdrew a little less in different amounts every day for 1 month, under $1,000, which was her limit. A month later, all these entries came back as being unauthorized. And unfortunately, the financial institution lost those funds because her account was actually emptied out. And it happens very frequently. In the news, we've heard a lot about pig butchering scams. It's a terrible name, but why do we name it pig butchering? Is because they fatten them up, victims, before taking everything they have. They take their identities and spend months grooming their victims to get them to invest in cryptocurrency. It's primarily out of Asia. They have like 15 phones in their room. There are barricades all around where they are staying. And unfortunately, there was an article on CNN about an 82-year-old who committed suicide because of being a victim and lost everything. The FBI dollars lost are over $4 billion, a 53% increase from last year. And they are so creative. And actually, one of my employees, her mother, was online on Facebook. Somebody came in and said, "Oh, I think I have the wrong number. What are you doing?" And she started having a conversation with them. "Oh, I'm watching a Hallmark movie." And he would say, "Oh, I like Hallmark movies." And we had to tell her, you can't be talking to strangers. Don't, even if they seem friendly, this age is a very trusting, handshaking population. Computer repair scam. This is when you receive a call from a computer technician, or you accidentally click on, you're going to add Norton antivirus to your computer, and you think you have the real Norton antivirus, and you do not. So in Maryland, just recently, and this is a good story, sort of, on July 30th of 2024, a grand jury has returned an indictment of 3 men impacting more than 1,000 elderly victims. The victims received a pop-up window urging them to call a phone number or an unsolicited phone call, and said their computers have major issues and that they need to pay. And I always worry about this because I multitask. And when I'm looking at an email, I may sometimes not look at all the details of that next of the email address. Believe it or not, sweepstakes and lottery scams are still around, and they're coming back because it's something easy where you have won money and you need to send money to get those particular funds. Impersonation of a government or utility company scam. I got two stories here. One, I was with my mother and I was driving, and she has her phone and she goes, "Oh, I just got a text message from Social Security that says if I click here, I get $1,000. I said, "Mom, how did Social Security get your phone number? And do you really think Social Security is going to give you $1,000? Well, no." And I said, "Well, you need to be very, very careful. Don't click on anything, and tell your friends also," because she lives in a senior living place. But I almost fell victim with the utility company. I live in Wisconsin, and I got on a plane to go on vacation with my husband, and I get this message that I haven't paid my electric bill. And I'm like, well, maybe I didn't pay it. Maybe I forgot to pay it with everything going on. So I quickly went on to We Energy's website and pulled up my bill, and it was paid. But when you're in a panic, and living in Wisconsin, it gets cold. So if my power would happen to get cut off, it would not be a pretty sight when I came home. So this does happen, and it can happen to anybody very easily. You didn't pay your cable bill, you didn't pay your phone bill, etc. Grandparent fraud scheme. Again, they call and they say your grandson or your nephew are in trouble and you have to send money. And this actually happened to a good friend. His mother got a phone call and she was about ready to go to the bank and withdraw the money. And thank God that I happen to know her as well. So they called me, I called her, and we were able to stop it. One of the recommendations that I was listening to on a webinar the other day recommended that you work on setting up a code. So if it happens again, you would say, ask them for the code, and they'll hang up because they don't have a code. So it's something you may want to set up a code with your grandparents, your parents, whomever, aunts or uncles. If this were to happen to you, have a code. Send out a family code for everyone to use. I'm not going to go through this slide just for a time, but it talks about phishing, smishing, phishing scams, and they're all listed here. And what they do is they text message you, voice message you, or phishing emails and get your identity, as Jason was actually talking about earlier in his session. So, which company is most impersonated in imposter scams? Again, you can put it in the chat and I'll give you a few minutes. Actually, it is Amazon's #1, Geek Squad is #2. And for those of us that are old enough, Publishers Clearinghouse is #3. In Amazon, when you have Amazon Prime Days, you actually can fall victim of scams in that particular mode. So again, you have to be extremely careful. Just to give you some facts, elder abuse facts from 2023 from FBI Internet Crime Complaint Center, IC3, over 101,068 victims over 60, and 3.4 billion total losses. And I was just at a session last week, and I was told that if you have wire fraud and it's leaving the country, if it's within 24 hours and you contact IC3, the chances of you getting that back increase, not guaranteed, but anything can help. And financial institutions can really, really help. They're in the perfect position to spot possible financial abuse of the elderly and can be instrumental in preventing this type of fraud. So you can train your employees, and maybe what you want to do is do play acting, or have them show videos. There's so much great information out there, including, and I know we're going to talk about that later on the CFPB, there's a lot of information out there. Designate somebody that can help out, whether that be the branch manager, somebody who can talk to the individual, and develop a protocol for reporting. How are you going to report it? Are you going to do a SARS, a suspicious activity report? And doing education to your account holders at the financial institutions is critical. So you identify, you try to protect, respond, and of course, report. One institution installed a form that when the person comes up and they want to withdraw a large amount of cash, they simply have them, they write a little bit of a paragraph and they say, please sign here, let us know where you're going to be using the funds, just to kind of slow down that process to prevent them from withdrawing the funds and thinking twice. Jennifer talked about the Elder Fraud Prevention and Response Network and how critical this is. And I'm just going to move to, because she covered this, but the Hawaii Association of Financial Institution Security Officers is called HAFISO, and it is a fabulous network. It meets every third Wednesday of the month on Zoom. It includes all the islands, Kauai, Maui, Lanai, and the Big Island. And it includes police officers, Homeland Security, FBI. It includes National Adult Protective Services, financial institutions. It is the Better Business Bureau is also on that call. And they just go through, it's an hour and a half, and they will go through and say, what have you seen? What are you reporting? And then you can help each other out. Well, they've also had this experience. It is the most valuable resource for a network. And we'll get into a situation where we had a scam that actually occurred in Illinois, and the FBI agent was working on it in Hawaii. So, and we'll get into that, but establishing a network is so critical. We had a situation here in Wisconsin. An elderly gentleman fell victim of a computer virus, and it was wiping his account out. He didn't believe it. His neighbor, who also banks at the same place, went in and reported it to the bank, and they said, I know, we've been trying. They got a hold of the police department. They happened to call us to find out if we had contacts at the other financial institution, and we did, and we were able to recover some money. So working together is so, so important. And I'm just going to briefly, I'm not going to read this whole thing to you. I'm just going to summarize it for you. And that is that we had an 80-year-old man, thought he was buying Norton virus software. Instead, he got scammed, and they were going to debit his account for the first quarter. And what they did was they got on his computer and they moved $80,000 from his savings account to his checking account. Then they called him and said, oh, we typed in too many zeros. We gave you an $80,000 credit. So take out the quarterly amount that you owe us, go to the financial institution, get a cashier's check, send it to a post office box in California. And he did that. And what ended up happening was that after he did it, he realized it. He called his daughter. She was very upset. The family was very upset. And putting a stop payment on a cashier's check is extremely difficult, according to UCC 3 and 4, which is a state regulations. And what I ended up doing was we ended up finding where the cashier's check was actually deposited at. We happened to have contacts at that financial institution, so we called them. They froze that account in 30 minutes. And after 30 minutes, there was still money in the account. So we were able to get back some funds. In addition to that, I was on a Hafiso call and I was explaining what had happened. And the FBI agent said, call me immediately, Mary. This is the case I'm working on. And they were able to do something with the case. So that just shows you the power of a good network. All the payment associations belong to NACHO, which is a national ACH association. We write all the rules and regulations for ACH, like Gary talked about earlier, direct debit and credit and all that information. We have a group called the Consumer Financial Exploitation Group, and we create materials and they're free for you on NACHO's website. And one of the things that we have done, and there's new materials being put out there all the time, is we have created a Money Mule infographic and a Money Mule video. So I'm going to ask Benjamin to play the Money Mule video.
If something sounds too good to be true, it probably is. If someone is sending you money, you could be a money mule. Money mules are people who, at someone else's direction, receive and move money obtained from victims of fraud. Some money mules intentionally help criminals, while others are unaware they're involved in illegal activity. Be cautious of the first contact with these scammers. They can offer unsolicited job offers and opportunities promising easy money or being hired without a formal interview process. There might not even be a job description. They could also contact you through emails, or texts, or phone calls posing as the police or the government or even your financial institution. You can also receive texts from strangers or new social media friends asking you to receive and transfer money. Stop and think before you act on instructions from strangers or imposters on social media posing as your friends, the government, or business profiles. More red flags to be on the lookout for are: they request your ID and passcode to access the money directly. They ask you to send the funds you receive to them or someone else using cashier's checks, gift cards, cryptocurrency, or payment apps that move money quickly. Or they tell you that you can keep a portion of the money that you transferred. Never give out your ID or passcode. Even your financial institution won't ask you for it. Criminals are known to use various tactics to trick you. They create a sense of urgency to pressure you into making quick decisions before you can think them through. They discourage you from consulting your family, friends, a financial institution, or professionals who might raise doubts or intervene. They will seem legitimate and may pose as an authority figure or someone who needs help. They manipulate your emotions to cloud your judgment. Empower yourself. Be on the lookout for warning signs and apply the brakes when you recognize one or more of the criminal's tactics. If something feels wrong, do not travel the road alone. Stay calm and think before you act. Professionals, law enforcement, family members, friends, and your financial institution can be helpful resources. Reporting your experience helps law enforcement take action. File a police report to create a record and then contact your financial institution for guidance on how to report to other agencies that may further investigate the criminal activity. There are people to help you. Being a money mule is illegal. You could be prosecuted as part of a criminal money laundering conspiracy, even if you are unaware you are committing a crime. Stay vigilant and protect yourself from money mule scams. If you suspect you've been a money mule, contact your financial institution today for guidance.
Thank you. So these materials are also, you can download them and use them, and they're free of charge. We have a checklist for that. This was actually created from the Bank of Hawaii. It's a scam alert that they use for cryptocurrency because they have a cryptocurrency machine right next to the branch. So there are materials out there for you. And I am now going to turn it back to Gary.
Thanks, Mary. That was awesome. It was also terrifying. I think some of what Mary presents is obviously informative, and the checklist at the end is great. And we've got somebody else coming up, Raylene Perney from Niche, who's also going to give us some tips on how to combat all these things. But, these subjects really hit close to home. We all, you talked about your mom and other friends. We all know people that have been preyed upon on these things. And it's really important that we band together to fix this. Raylene Perney is Director of Risk and Fraud for Niche, a not-for-profit industry association for financial institutions that process payments. Raylene oversees Niche's comprehensive risk management program, advancing strategy to support both industry and member efforts to identify and mitigate fraud. She'll share some promising practices and resources for payments professionals. Raylene?
Thanks. Hey, everybody. So I'm going to keep my comments kind of short and sweet. I'm a fraud investigator, have been for 27 years. So the bio that Gary read was the nice step version from marketing. But it's just fair to say that as a fraud investigator, my primary goal, as any fraud investigator will tell you, is that our primary objective is actually to mitigate fraud, not to have to investigate it on the back end. So Mary gave you a lot of great resources. I tried pulling together some resources, which is available in your downloads there. But even just sitting here, I'm like, gosh, I forgot to put in the financial fraud kill chain that Mary referenced. And, there's just so many wonderful tools that are already built out there. I work with law enforcement. I work with APS. I work with state and federal agencies. I've even gone to community centers and to retirement communities and facilitated education there. And a lot of what I take with me are pre-developed materials because, quite frankly, I don't have time to develop everything. And there's a lot of really good people fighting the good fight out there that have already developed some wonderful resources, like the video you just watched, which, by the way, a lot of people are asking for a link to that video. It looks like that just went out on chat if you didn't grab that. So there are a number of excellent resources that are already out there that, depending on what it is you're trying to accomplish, combating this from the perspective of trying to prevent it from happening in the first place, in my opinion, is one of the best ways financial institutions can try to tackle this problem. Yes, it is very beneficial to understand the scams that are out there, and you're going to have some battles, right? We have account holders that have been groomed. I don't really care for that word, but I'm not quite sure what the proper term would be. But they're groomed by the fraudsters for months to say only this to your financial institution or do this. And that way they won't ask you any questions. Or, if you tell anybody, you're not going to get all of this money. And there's a level of trust that is essentially built up in that fake relationship. That is one battle we face. The flip side of that, and I've been told by more than one senior in my career to mind my own business and get out of theirs and to get out of the way because this is what they want to do. So going back kind of to Mary's talking about the networks, I think one of the things I'd like to see more of the nationwide networks do is have that hard conversation. It's an uncomfortable conversation, but I think it's necessary to talk about limitations that each of our disciplines have. Financial institutions, we're under some limitations. Law enforcement, if the prosecutors aren't going to pick up the case, if they don't feel that a certain type of scam that the senior's involved in meets the standards of the state law, then they're probably not going to prosecute for law enforcement. Not going to get involved in the investigation. I'm sorry, am I echoing a bit? Oop, maybe not. Okay.
There was a little audio blip reeling, but I think it went away.
Okay. And then have the conversation with APS and find out, how can adult protective services help? How can they not? What I have found is if networks have those difficult conversations and really dig deep into what everybody, it's going to take that. It takes a village, right, to solve this problem. No one of us can solve this problem. Law enforcement can't solve it by themselves. APS can't solve it by themselves. Sorry, CFPB, but you can't solve it by yourselves, which is why we're all here, right? We're working together. It takes that village. And if you have that hard conversation during those network meetings, I think what I have found is a lot of times you can find what is the best path. What is the best way? What are the appropriate documentation that, for example, a financial institution needs to pull together in order to, get that case picked up if a case needs to be picked up, or who can you call to help you convince the elder not to proceed with the action that they think they're supposed to help convince them that it is a scam. I could go on literally for hours. I've actually done so, but I don't want to do that. So you have some of the resources there. Like I said, go out to the FBI's website, the Department of Justice, AARP, your state agencies. I know our Attorney General here and many states' Attorney General's websites have entire pages on their website devoted to this very problem. Find those resources that you can take out into your communities and to your account base, working with other organizations. I saw many observations here about the IAFCI and working with the CFPB and their resources, things like that. These are all great ideas because, again, it kind of takes that village. And our goal is always to prevent the fraud from happening in the first place, prevent that $50,000 loss to that elder. And I think really, as a fraud investigator, that's becoming our predominant role. Find the methodologies and the ways to help prevent that loss from happening in the first place. So I really don't want to belabor that. That was kind of my message that I wanted to bring to this group. At this point, though, some of the best resources I found are actually on the CFPB's website. So Lisa, could you join the conversation and kind of go through what resources there are out there for everybody?
Yes, thanks so much, Raylene. And hi, everyone. My name's Lisa Schifferly, and I'm a senior policy analyst in the Office for Older Americans at CFPB. So I'm going to talk about a few of our free CFPB resources, and we hope they'll be useful to you, whether you're in the payments industry or whether you're an advocate for older adults. We hope these resources can help make your jobs easier and help you help older adults in your communities learn more about financial issues. So one of the first ones I want to talk about is our network development guide. You've heard a lot on this webinar about elder fraud prevention and response networks, and this webinar is actually a part of our network project and program at CFPB, our webinar series. And when we're talking about networks, we're basically just talking about groups of people in a community who work together to combat elder financial exploitation. So they can include lawyers, social workers, nonprofits, APS, payment professionals. Anyone on this call, and a lot of people not on this call as well, can be part of a network. And what this guide does is it has extensive materials to help you host network convenings and trainings. It has things like user-friendly planning materials, sample invitations, a facilitator guide, worksheets, and other documents. The materials are really suitable if you want to start a network, and they're also suitable for use by existing networks that might want to expand their membership and review priorities or do things like establish working groups or establish case review teams or other activities. Another great resource I want to tell you about is our YouTube library. I mentioned that this is part of our network webinar series. Well, we did over about 13 webinars last year, and then more this year. And you can find them on our YouTube channel. They've had over 14,000 views right now. And our network webinars are available in 2 playlists. There's one that focuses on elder justice networks, things like how to plan convenings, how to build networks, and then one that focuses on what we call special topics in elder justice. So those are more substantive trainings like Money Smart for older adults or scam prevention materials. And there's one also on financial caregiving, age-friendly banking, and a variety of other issues. So you can find these all at CFPB Live on YouTube, or you can go to consumerfinance.gov/elder networks. And consumerfinance.gov/elder networks is a great way to find not only those YouTube videos, but also that guide that I just described. We also have a bunch of fraud prevention materials, and you'll see some of these on this slide. There's our Money Smart for older adults materials, as well as fraud prevention handouts, bookmarks, and placemats. So let me tell you a little bit more about each of these. Our Money Smart for older adults curriculum is a scam awareness program that we developed together with the FDIC. And it has an instructor guide, a resource guide, a PowerPoint. So it can really help you deliver presentations to groups. It's a plug and play program, has a fully scripted instructor guide and fully scripted PowerPoint. So you could just take it and go give a presentation on elder scams tomorrow, today, even tonight. So we hope you will check them out. You can use the instructor guide for your presentation. It's available in English and in Spanish. And then we have a resource guide that you can hand out to the audience. It's in 14-point font for easier reading. And it contains things like information and activities to help learn the material, glossary of key terms, and other resources. And again, these are all available in English and in Spanish, and you can order them for free from the CFPB's website at consumerfinance.gov/order. We also have our Managing Someone Else's Money guides. You can find these at consumerfinance.gov/MSEM, like managing someone else's money. And these are guides to help financial caregivers understand their duties. So they're designed for regular people who may be new to this role. They've just become somebody's agent under power of attorney or guardian or trustee. And they provide tips and resources to help fiduciaries protect, invest, and manage money for someone who they're named to manage it for. It also has information on identifying benefits a care recipient might be eligible for. It describes warning signs of financial exploitation, goes over a lot of the scams that you heard about earlier in this session and how to watch out for them, and has information on where to get additional help. You see here the different colored guides. There's one for agents under power of attorney, one for guardians, which in some states is called conservators, one for trustees, and one for government benefits fiduciaries, so Social Security representative payees or VA fiduciaries. We also have a great guide for people who might be planning for when they need a financial caregiver or planning for diminished capacity. This is designed for people earlier in the caregiving process. So maybe you notice someone seems like they might need help managing their finances, or maybe you're planning ahead for your own financial future or the financial future of an older loved one. This helps you know your options to choose what works best for the situation. It covers informal caregiving options like convenience accounts or adding a trusted contact person. It also covers the formal caregiving options like power of attorney, guardian, trustee, or government fiduciary. And it gives you a really helpful list of questions to consider who's the best person to choose as your financial caregiver. So you choose somebody who will honor your wishes and not financially exploit you. So again, you can find this one at consumerfinance.gov/MSEM. It's part of the Managing Someone Else's Money series. And as you deal with elder fraud and scams and elder financial exploitation, it's also important to know where to direct people to report these things when they occur. So for scams, you can report it to reportfraud.ftc.gov. For identity theft, the site is identitytheft.gov, and that site will walk through the steps to take for more than 30 different types of identity theft and give a personalized recovery plan, as well as an identity theft report that can be used to exercise their rights under the Fair Credit Reporting Act. So now, if you have a problem or are dealing with someone who has a problem with a financial product or service like a credit card or checking account, we do encourage those people to first reach out to the company directly. But if that does not work, they can submit a complaint to us at the CFPB, tell us about their issue. We'll generally forward it to the company and work with them to get a response, which usually takes about 15 days. So consumers can submit a complaint about things like loans, mortgage loans, student loans, payday loans, auto loans, and then other things, products and services like checkings or savings accounts, credit cards, prepaid cards. So again, that's consumerfinance.gov/complaint to file a complaint with the CFPB. And last but not least, I want to leave you all with these resources. The Office for Older Americans. If you would like to reach us, you can reach us at olderamericans@cfpb.gov. And all the resources I described today and a whole lot more, you can find at consumerfinance.gov/older-americans. That's our Older Americans website. And again, all of these are free publications. You can order them in print to have shipped to you at no cost, or you can download the PDFs to use or link to them on websites or otherwise. So we hope you'll use these free resources in an effort to combat elder financial exploitation in your communities. And with that, I will turn it back to Gary and Ben to take questions.
Thank you, Lisa. That was great. A tremendous array of resources. I also want to give a shout out to Breezy Ferreira, who's manning the chat and is also posting a lot of these things and working with Ben. So there's a tremendous amount of information that all the presenters have gone through, and I think a lot of links and sources to go and find that. We're going to move to the Q&A portion, and so I'd like to ask our presenters to turn their cameras on. And Ben, where's my little camera? There it is. Okay. All right. There's Lisa, Jason, Mary, and I think Raylene. We're not sure if she's going to be able to get to camera.
We're gonna try, but no, it's blackened. Sorry.
Yeah, I'm sure the audience members wish that was me and not you, but we'll just have to get by. Okay, so a lot of great questions there and some good ones from the audience that I know we're capturing. But I just wanted to start, I think, with given the resources that Mary went through and Raylene went through and Lisa went through, there's a lot of information out there. And so kind of to wrap it up, how do you get started? If you are a financial institution, maybe I'll give that one to Mary. And then how do you get started if you're in law enforcement or a non-financial institution, to Raylene to start. But Mary?
So the way to start is to put in your community a group of financial institutions that you can network with, include your local police department, include adult protective services, who you deal with in your community to help you in these situations, and have a monthly call and pick and do it via Zoom, because not everybody is going to be able to get there in person. You can try to do it in person, and bring in resources. So if you have like a payment association, include them as well. Include as many people as you are aware in your area that can help you come up with, this is what we're experiencing, and have it be very simple and start networking. Or if somebody is going to be, I think Raylene put in the chat, and I've done this too, if you're going to be presenting at, a senior citizen apartments or whatever, get materials off the CFPB. I use the placemats all the time. It's a great idea to get them engaged. There's a bingo one, so that's important too. They like to play bingo. But anyway, those are all, start locally. And I know one of our board of directors who's in the Maryland area, he gets the police department and other financial institutions close by, and they meet. So that's where you got to start. And you have to have somebody who's going to run it. So for example, in Hawaii, it's the Bank of Hawaii. And you have a designated person who sends out the Zoom link or Microsoft Teams link or meets with them. We did a great big thing that Jennifer Dunn will remember in Hawaii, that on June 15th, we had, the governor, we had everybody behind us, and it was a huge success. Include your church as well, because people will go to their church to say, hey, I fell victim, or they'll do something on that order.
Sure. Raylene?
Yeah, so I think regardless of who you are, you have to figure out what problem are you trying to solve. So this is like, trying to take a drink of water from the ocean, right? So what problem is the financial institution, the law enforcement agency, the APS, what problem are you trying to solve? And then take chunks out of that. I think the networks are a great place to start. As Mary said, I would not limit it to just a small subset unless that's where you want to start. But eventually, again, you need to have that hard conversation. What are the limitations? State laws are really a big challenge, particularly for institutions that are in multiple states. So when I would have to file a case or file a hotline report with APS, I might get one answer different than I would on a very similar, almost identical case when I reported in another state, just because of the varying state laws. So I think that having that hard conversation is also very, very important to make sure that we can find ways through those limitations and those stopgaps. And collectively, I really do think we can do that.
That's great. So don't I think two themes there, like, don't let the magnitude of what could be done and everything that's out there, stop you down. Just start having the conversations, but be cognizant of, information sharing and state laws. Jason, a couple of questions came up during your great presentation. So I'll read one of them. Where are the red flags of the person's information being used for fraud coming from? Is this Centrelink data, or does the company belong to a consortium?
Sure, that's a great question. Generally, the answer is Centrelink data. And by that, I mean, I described our models, they're machine learning models, and what they're doing is piecing together various insights they can see both from the application information that they're receiving from a financial institution, and then what they know based on our other data sources to answer that key question, sort of like, does it all make sense? And if not, it generates those signals that I saw. Just very briefly, from a data perspective, things that we rely on, sort of the foundational thing would be credit header data. For those of you in law enforcement, you're probably very familiar with that. That's a very helpful signal to help us understand characteristics about a person's address, for example. To your question about, do we belong to a consortium? The answer is no. We sort of are our own consortium by virtue of the fact that we work with a whole lot of financial institutions. And as we work with them and they work with us over years and years and years, we've seen several billion applications since our company was founded. That becomes its own consortium and has a very powerful effect on our ability to see historical patterns. We rely on some external data providers. For example, you heard me talk about understanding how old an email address is. That's something we don't know on our own. We rely on companies that specialize in knowing when an email address was created to help us determine if it makes sense for the consumer whose application we're reviewing. And then finally, authoritative sources. The more we and our financial institution partners can get to the source of truth For example, we're able to validate name, date of birth, and social security number combinations directly with the Social Security Administration, right? What's the source of truth for your SSN? There's only one place, the Social Security Administration. So being able to tie all that together is where those signals come from.
That's great. There was a follow-up question to that. I understand that history can't be cheated, but are there best practices for verification of actual history? I feel like it's easy to get diverted into a synthetic history for a fraud victim.
Yeah, boy, great question on that. I, kind of steal Raylene's line. It takes a village, and in this case, I mean, it takes a data village to try to help you get closer to verifying the veracity of historical data. For example, Mary being the hardened identity criminal, right? She could steal my identity and apply using all of my information, but use her own Wisconsin phone number, for example. That's a legitimate phone number for Mary from Wisconsin, but of course it doesn't connect to me as a resident of Virginia in any way, shape, or form. So through that pattern analysis, connecting the dots that we and many others in the industry, we're not unique to this. We think we have a great secret sauce, but this connecting pattern, seeing the links between a Wisconsin phone number and Jason in Virginia, that doesn't make sense. So it's making those conclusions can help validate, hey, does this phone number that's been around for a very long time make sense and correlate to a real person? You mentioned synthetic in your question. Or is it really Jason or someone who has stolen his identity?
Very, very helpful.
Gary, I just want to mention too that and Jason, you participate, and Raylene, all three of us actually worked with the Federal Reserve Bank on a fraud and scam identifier, which is out on the Federal Reserve Bank website. And it steps you through. And we spent a whole year looking at fraud. And Jason's laughing because it took us like 8 hours to define 3 words. But anyway, it is a great tool out there for financial institutions to use to identify and to assist in the scam reporting as well.
That's great. That keys up a question I have to maybe close it out. But I'm going to ask Lisa really quickly. We got a question. I noticed that the guides managing someone else's money are provided as PDF downloads. If somebody wanted to pay, would we be able to purchase books?
They're actually available for free. You can go to consumerfinance.gov/order, and it's all available for free there to order.
Great. That's awesome. Nice softball there. So, one thing I was thinking about is that we talked a little bit, Jason talked early on about how identities are verified. We talked a little bit about how payment systems are changing. And so, Mary and Raylene and Jason and everybody went through different forms of fraud that, 20, 30 years ago wouldn't have existed because the only ish would have been fishing with an F and putting a hook in the water and none of these other things that have emerged since then. And so, as you all are seeing these, are there emerging threats that might, that we're just waiting to see either in the form of identity theft or what other issues might we run into? And I know that I'm putting you on the spot a little bit, Mary, but you talked about the Federal Reserve Banks and the joint thinking there. What else? What might we brace ourselves for?
Well, we do have another new payment rail. It's instant payments through RTP, which is real-time payments through the clearinghouse, and we have FedNow. And those payments settle within seconds that they post and to the account holder's account, and they settle immediately. And it is all credit push. And there are new warranties and new fraud detection systems that are really starting to look at that as we expand it. And, there'll be a request for payment. And if you do, you can accept it without posting if you suspect fraud, to look at those kinds of things. So I think you're always going to you have to be aware that there's going to be constant things happening and changing. But unfortunately, one of the biggest problems we have today is check fraud.
Yep.
And it's the lowest common denominator. And we are seeing so many losses in check fraud. And again, the elderly, they put checks in the mail, they put up flags. I'm at the end of a street where I have elderly people, and they're putting checks in the mail and putting up a flag. And, we have to do better at educating that checks aren't going away, but it is the easiest common denominator today to commit fraud.
The biggest thing that I'm seeing right now, beyond just the stolen mail, is actually what is being coined as unsolicited check fraud. And so this is receiving a check in the mail you didn't ask for. And the letter attached to it says, just deposit it. Hey, great, just deposit it. No problem. This is a pre-approved loan, or it's a rebate, or it's something. But as soon as you endorse that check, it is incredible, something like $250 for depositing the check, plus 500% plus interest, because you've essentially just signed over to a loan. So that's the bigger issue I see with seniors. They are receiving these things in mass.
Yep. Very, very helpful. I know we're pressing up on time here. I would just add that to emphasize what Mary and Raylene just said, not only the checks not going away, they are settling and clearing much faster than they ever did. So it's not only a means to have access to someone's account, but it's a means to pull out money much faster than they could have even a few years ago. So Ben, I think we're at our time, and Jennifer, I'll turn it back over to you.
Yeah, over to you, Jennifer.
No problem. Just thank you all so much, our fabulous speakers, Gary, Jason, Raylene, Mary, and Lisa, and our production crew from ICF, Ben at the lead, at the helm, and Freezy. And this has been tremendously full of a lot of meat on the bones here that doesn't, I would say it's really innovative. I've never seen a webinar like this before, where so many speakers from a rather sort of not on the main screen of elder abuse or in the elder justice world yet. You're coming up fast, and it's really great to have the chance to hear from you all today, and all your insights were really fantastic. And the comments, everybody leaving comments and questions and your own insights, all of you who attended today, thank you for taking the time. So many of you are still here an hour and a half plus later. And so with that, I will say farewell. I think we can leave the comments open for a minute if you want to keep commenting, or if you have questions or you need follow-up. Otherwise, I hope you all have a great rest of your day.